What's up, everybody? Tom here with another video. Well, I think that was a pretty big earnings week. And of course, now that it's over, we move towards the next earnings week. And we have to ask ourselves the question, was that the best we're going to see out of the market? And will we now see the big bear come out? A lot of options expired worthless and some expired in the money that even surprised me. Plenty to cover in this video. Stay tuned, guys. Okay guys, well, one of the best places, as we all know, to start when we're talking about the week ahead in markets is to have a quick look at the SP 500 for the Friday session. And when you look at a heat map here of the SP 500, you'll notice banks are down and financials are down, mostly due to the 10-year dropping even further. That'll be something we're discussing today. We've got Amazon down heavily after its earnings came out on the Thursday session. Of course, that was always going to happen as soon as we saw those earnings. And then we have some surprising ones. We've got Tesla making a massive resurgence here in the markets. We'll definitely be discussing that today. And we've got AMD as well, which has been a very big social chatter point. You'll know that I was talking about, of course, Wall Street attacking that level. And we'll just quickly discuss that some more and whether I got it right or wrong, and also whether I got the general market right or wrong for the Friday close. Now, one of the things I did theorize and I did discuss with the live community was that I expected a very lackluster, basically sideways to slightly down day on the Friday session. Now, why did I expect that? Because so many stocks were coming into very key option strikes. We saw, of course, a big increase here for things like all of the markets in the morning, creating that buy the dip style scenario. And then by the end of the day, they kind of just all flattened off and closed around the middle of nowhere, really. And there was a reason for that, I believe. We move over to the actual stock market indices. And again, it was another strong day here for SMH. That is the semiconductor index, with AMD, of course, leading that one. And then we had everything else in the middle with the financials and energy stocks really taking a battering when it comes to the 10-year yield and just in general energy getting kind of beaten around recently. Now, if we're thinking about what's happening for August and September, I've argued this quite a few times that I believe August and September, historically over 20 years, well, it's not really even an argument, it has happened, have not really done great numbers. Now, you may disagree with me on this, but this is just the 20-year stat, and I always use this actionable data to bring into a concept of maybe a bias that's different from anyone's real opinion. You know, if we can take the data and we say, okay, August, September, they're medium, kind of not really great months for the Nasdaq, and we see a bearish kind of momentum play come in the price action, will I take more attention to that? Absolutely, because we know that that's when it occurs. We've also argued plenty of times that September's the worst month of the year. Again, if I see bearish action around September, will I be more likely to take larger positions at that point? Why wouldn't I? That's the type of thing that makes me more confident in something. Now, you should always practice correct risk management, but you get what I'm saying. Actionable data is a really important concept. So let's get straight into the technical analysis here, and we'll begin by discussing the dollar index. So yes, I did think that this was going to be a little bit of support for the dollar index. It bounced off the 50 exponential, and it did find some kind of pressure. Now let's go into the smaller timeframes just to understand how this actually worked. So when we're talking about structure, this is a good old-fashioned, I guess you would call it, like slight stop kind of hunt here, and then instant reverse on that to push it back up. Now, do I feel like the dollar index is going super long and everything's all great again about the DXY? I don't think so. I mean, it's got some big problems with it in front of it now. You're already at the previous support equaling resistance. Then you've got the 20 exponential moving average up here for the week. And if we actually go and close the week out, you'll notice that it did close underneath the 50 exponential overall. So dollar index pretty muddled here. It bounced. Do I like it either way? Not really. I think most of the trades are in other things. All right, let's move over to gold now and have a bit of a discussion about what's going on in gold, because I think the dollar index is a lot harder to trade, a lot more murkier in the waters when compared to something like gold. Now, gold hit our first target. Excellent. 1830. What a great level. Congratulations, anyone that took gold. This is a phenomenal trade. I'm very, very happy with this type of one. This is, I would call it like El Clasico to me. Like, this is the type of trade that I love to take straight into the resistance. take off entries. If I believe in it for the longer term, then I'll scale out a position here, etc., and wait for further breakings and move those through. But this is a very, very good trade, and I love these types of setups. They're really excellent. I've used them plenty of times throughout the years. Now we're at an interesting point because, of course, we're talking about how dollar index is murky. we thought that it might bounce off the 50 exponential. That's just a guess. We obviously saw gold having a little rally through here and coiling at this point before it possibly moved up. If it moved down, we theorized it would move straight into this level and then bounce. Now, it did do that. We hit the resistances, which has become support. We've got, of course, a bullish hammer or pin bar, if you want to call it that, which is usually like an activation point for the market. But by the close, we didn't see it bounce and actually start to show momentum. So through the Monday session, I would like to see a green candle here. And then hopefully we can begin further rallies. A lot of people will have stop losses underneath this point. So if you do break and close underneath here, expect it to get a little bit smashed around. We go to the 4 hour, similar type of candle. We go to the daily, you'll notice it just looks like a bearish candle back into support. So I'm not worried for gold. I think it's right back where it needs to be for the bulls to take control. Will the bulls take control? We'll see whether they can push through the momentum. It's probably a good time to also discuss silver because silver's back on another great support. Here on the 4 hour, now a lot of you are probably saying, Tom, that looks like a flag. Oh, you're absolutely correct. That does look like a flag. Now, has it confirmed and begun? It hasn't. But this is a flag style pattern on silver, and it's the first time we've seen silver kind of really wake up and try to do something. Now, what I like about this is we've got this line coming through here, and you might say, oh, where's that from? Well, this actually is from a bigger trend line that we've been running here on silver for quite some time. We got disinterested in silver once it got underneath that point. There's a good reason because at that point, you're talking more about the short side. And obviously, I prefer the long side for silver over the medium long term. What we're getting now is coiling before a potential breakout. That's the correct type of pattern that you want to see. And we go down to, again, the 4 hour here, and you'll notice the bullish hammer. You'll see the flag. You'll see the proofing to the previous level of resistance. Somewhere around that 2650 would probably be a very good level to be targeting, 2645 for the market to push through to. And if silver starts firing and gold starts firing, these could be some of the trades of the week next week. We've got non-farms coming up. That's, of course, the payroll numbers. There's a lot to like about these if they do start to break through. At the same time, why is gold and silver potentially not bad? Well, we've also got the 10-year coming down. So this is the expectation for where interest rates are going to be over the next 10 years. And they're currently sitting at 1.22. Now, this is very unhealthy for the stocks in the market like the financials. That's why we're seeing the financials getting beaten around. We didn't quite close under that 122, which we're looking for further shorting of the US 10-year. But I'm starting to think, if it keeps coming down like this, although low yield is good for growth stocks theoretically, things like the Nasdaq, etc., I don't particularly think this is incredibly healthy for the economy to be down here. I don't mind if it sits around 1.5 to 2, but down at 1.22, that's not ideal. So if it does break underneath this level next week, I expect it to continue to further down here. And at the same time, of course, you would expect the bonds to start rising. And they had a decent Friday session, up 0.47. We keep watching these bonds. All we're doing with the 20-year is just really bouncing it off the 20 exponential. And as long as it holds this trend, we're looking for that 155 number. And again, strong bonds. It is a strong time for the bonds at this point in the year. And sometimes strong bonds and a strong market, it might be telling you an early warning sign. So we always bring those up whenever possible. When we speak at the banks, I might as well bring up JP Morgan. We've still got that head and shoulders theoretical here. JPM closed 151.78 on the Friday session. This head and shoulders style pattern, of course, can show weakness. And if it does close underneath, I would expect further shorting off and this to begin maybe a catalyst of weakness throughout August and September. This is one of the biggest catalysts that I'm looking at in the markets right now. Let's move over to a few individual stocks now. So we'll start with AMD. So probably a lot of you are saying, Tom, you were wrong about AMD. Hey, I'll be the first to admit it. I thought that $100 would hold AMD down. I also thought that the 105 would hold on the Friday close. So what I thought we would get basically a 105, we'd sell off, which we did Thursday close, and then we would see further weakness. Now, what I probably didn't account for enough here, well, firstly, I like trading the technical the most. So, here's the technical. We're at the resistance right now. You can see it. So I think what I probably didn't do was I just kind of went with the $100 arbitrary number. Look, you guys know I love AMD. I think it's a very good company. I got the Ryzen 5900 in my computer. It's good, by the way. Go buy AMD. Very good. And not promoted, but good stuff. And we were talking about the option strikes. Now, every single one of the other option strikes, the Apple strike we spoke about, the Snowflake strike, the DraftKings strike, the QCOM strike, the Tesla strike at 700, every one of them was manipulated successfully. But I got to say, I don't give enough credit to retail when retail is due. So this week is another war zone for AMD and options. If we go back into the options for the week ahead, notice how many have been opened around 105, around 106, around 107, even the 110. There's a huge amount here early. So I expect this to be very, very popular. Now, why I said I didn't probably give it enough due is because when you look at something like a Tesla for that week, or you look at Tesla's now ranking, but you look at something like a DraftKings or other ones that were more easy to spot, they didn't have the kind of social volume change that AMD did. If I look at stock tweets, if I look at Wall Street bets, if I look at Twitter or anything, AMD was out of control on those. And I'm not saying that Wall Street won't win in the end and that they will punish a whole bunch of option call holders and it's still worth looking at. But because of the huge rally, I mean, you can see here the hype score is literally a 5. It's a very high hype score. It was probably a 6 at the point. This is the type of thing where if you get so many people buying calls, of course, Wall Street has to technically cover up. And when that happens, it's not really possible for them to potentially manipulate that stock. They might as well go manipulate all the others. So well done to the retail community. It certainly is a good, like, I guess, lesson to be looking at here about how powerful things are. And I guess if I was going to look for options, I mean, one of my favorite picks was DraftKings around that $50 mark. And kind of punishing that level. But yeah, it's really not, you don't want to go for maybe the most popular one. You want to go for that sub tier. So somewhere in maybe the after the 20 top hyped stocks, because when retail gets on something, it's very powerful. We've seen that with AMC, we've seen that with GME, and we may be also seeing it with Tesla. If you go over to Tesla this week, you'll notice 60,545 units opened at 700. So let's see how that starts ramping. Now, Friday, oh, they're nasty. They are nasty, guys. Like, I told you 700 was the top strike. Do you know how many people would have been opening 700s somewhere around this point during the day? So many 700s expired worthless. So while they let AMD through to the keeper, for a cricket term, they did not let Tesla through. And it went up to 700 and instantly sold off and punished all the people buying here. So that expired. We've got a new week. We've got a big amount of calls already sitting on 700. We've talked about how 700 is the flashpoint. So if we get a closure above here, we expect it to be very hard to keep down retail, and this to be one of those fever points where you'll see a huge amount of people just buying options, buying into the stock, everyone to be talking about it, and it's already starting to rank up. You'll see on that hype equity, it was already starting to move. So just as an explanation, AMD, I probably didn't look enough at how many people were really talking about it. And the rest of them, well, they all worked out. They all literally sat underneath. QCOM, in fact, if we think about the 150 strike, which was the one we were looking at, closed at a 149.81. So is there any coincidence that it closes straight underneath exactly? No. This is what happens. They definitely try to do it. It's just this time, I actually think retail won, and that's awesome for you guys. For now, anyway, we'll have to find out what goes on next. Let's check out IWM. This is the Russell 2000. We're in a big channel here between 2 points. We've got our resistances at the top and our supports at the bottom. We are in the middle of it. So what do? I mean, it looks weak from the 2 dailies here. If you were looking at this, you would say rejection, rejection, and with the 10-year coming down, IWM for this week, the Russell looks certainly much worse than it looks for the buy time. I mean, if I was looking at this, because there's so many financials in it, long leg doji on the weekly, imagine if we get a closure underneath. I mean, the bears would definitely be back in control of the market. If we get a closure above, then the bulls would be in control, and I would expect the next week for us to break back up to the 233. So middle of nowhere for IWM, but it is weak to the 10-year, and that will be something we're watching. Over to the QQQ, what's going on here? Not much. I mean, it filled the gap, I guess you would say. Basically filled the gap, then sold off a little bit. Did hover around. I don't know. I mean, QQQ is not really showing us bear signs. If I wouldn't be scared right now in the markets, and I've maintained that. I'm optimistically cautious, which basically means I know what's coming for the Nasdaq historically over the period of August and September, but we haven't seen the bear signs yet. Are these points where people sometimes hedge up and they make, protection plays over this point? Yeah, I can totally see why people would do those types of things, and I don't blame them. But we hit the first trend line. These are the resistances. We've sold off that point. We know if we close above here, then the Nasdaq has a bit more to run, and so does the S&P 500. And if we start to find weakness where we close underneath the 360 on the QQQ this week on the daily, then I expect us to go straight down to the 350 area. And this 352, if we close underneath that, I would think the bears are in control. And at that point, we're talking about a correction. So if we get under 352, I would think we're talking about a correction. And that's actually not that far away, And if we get above here, then we're looking a lot better in the markets than we are currently. S&P 500, similar type of thing, weekly closed, very lackluster week considering how many earnings came out. That is really small amounts of movement, actually, when you think about all the big earnings and everything like Apple, Amazon, Microsoft, Google. I mean, what a disappointing earnings, really, from the market. Again, shows me lackluster kind of, I guess you would say, movement to, the hype and expectation. We do have our community trend line up here, which is the best case bull scenario that I see in the short term. And the bear case, I'd be watching the Nasdaq. That's the one to be looking at. That's the one with the stronger companies that become weaker very, very quickly. So yeah, it's on support at this stage for the S&P 500, but very, very little move. We'll keep looking at throughout our usual weekly content. Let's move over to the Dow. Dow's doing nothing, coiling at the peak over here. It's stuck in a range. If you're a day trader, you would probably be liking this type of range. You would definitely horizontal that up. And then if it broke either way, you could always look at opportunities either side of that. And if we move over to Bitcoin, this is probably another one of the big stories. You've got gold moving and you've got crypto gold moving. Crypto gold is on fire. It's coiled for a couple of days. So on the daily here, we had a little bit of coiling. Then we got that breakout. And if we go and have a look at that on a 2-hour chart, you'll notice it just kind of comes through strong, gets a closure, and starts this rally. This is pretty good. And if we go over to the weekly, we're looking for a weekly close above the 20, which at this stage looks very, very probable. We know 42.5 is our end game kind of level. And this is playing a very, very nice accumulation pattern. We've talked about Wyckoff here before. I think the better, stronger trade is probably on something like Ethereum. We're finally getting through that 2400. We've completely confirmed that level now. So resistance over here, comes back down, bounces, 26 is the next target, and then 28 after that. This is a very strong trend appearing in Ethereum, very strong trend appearing in Bitcoin, and yeah, the cryptos are definitely back in town. Earnings for the week, I don't have the calendar yet up for, of course, Earnings Whispers. I would suggest you get that one just for the big ones, but you can also come over to Market Insider, Market Watch, and get all of your key earnings. There's a whole bunch of big ones, but there's not anywhere near last week's earnings results. I think the big thing for me this week is going to be, of course, non-farm employment change. Make sure you're there. We will be live streaming this one. It's on the Friday session, generally 1 hour before the New York Open, so 8:30 a.m. New York time ET. And that is the big bit of news. This could be the catalyst for it all. Non-farm payrolls, very important at the moment to make sure the US economy is right on track. And if it isn't, it could be that excuse that Wall Street need. Thanks so much, guys. And I know there's a lot of rumblings going around about shutdowns in America. There's a lot of rumblings about all sorts of different problems on the horizon. It's just whichever one they choose to pick, really, if they want to shock the markets. Remember, it's always in plain sight, the issue. It's just we don't see it just yet. Bye for now.